What's up everybody, Tom here with another video. In this video I'll be discussing why the community trend line is the most important chart to be watching right now in the stock market. We'll also be talking about our technical analysis for the Sp500, Nasdaq, Bitcoin, Tesla and more. Tesla just happened to go on a rocket ship yesterday, but where does it stop? And for how long do these party stocks continue to party? Stay tuned. Alright guys, well here we are at the heat map of the S&P 500 big large companies, and you can see very clearly that there were some standout trades yesterday. And look at this, Tesla fans, I'll give you a clap. Congratulations on getting through 700 and of course now smashing through that 720 resistance. That led to Tesla having a massive move yesterday, and people that have been sleeping on Apple into earnings, of course 2.43% up. It's been all good, all green, all good, I guess you would say, for the Nasdaq, and hyperstocks coming back through right after that Nasdaq move happens. It's just so fascinating how all of these indices and all of these sectors are intertwined in the markets. And when you start to understand that, which we try to do on this channel, it gets exciting. So remember, subscribe and hit that like button if you do enjoy it. IWM, the Russell 2000, was a little bit disappointing yesterday. The Dow Jones was down because, of course, of that Johnson & Johnson news. But look, everyone was saying CPI, Tom, CPI. Don't worry about the CPI. Also, don't worry too much about that vaccine news. It is a blip on the horizon. And while it created a catalyst for hyperstocks and, of course, all of those pandemic style plays, realistically, they were going to move up regardless. This was just a catalyst that allowed them to go through. Nasdaq 1.21% continues its roaring kind of positioning, and the SPX 0.33%. When we take a look at the sectors, it was a little bit weird. I mean, you had utilities, which is traditionally a bit of a hedge kind of index coming through. You had a decent amount of strength in health. You had, of course, your consumer discretionary and technology leading the way. Very fascinating stuff. Not too much to think about in the sectors. I think it was more something that this chart can't show, and that was hyperstocks and big tech were the big beneficiaries, specifically ones that have been slept on over the last couple of weeks, if not months. Now, we've been talking about put-call ratios, and that's because this now becomes the most important thing along with the S&P 500 community trend line to be watching, because with all of this, you know, grand, big, bullish movements that are going on in the markets, a pullback will occur. And the pullback may not occur during April. It may actually be sell in May and go away this year for a little bit before coming and returning back for June. Because if this market continues to go up the speed at which it's doing, we have to watch how many puts are being opened to calls. And that's why you've got to have PCC and some other things I'll be showing you during the live stream tonight on your charts. 0.686. So actually the put call ratio declined yesterday, and this means that more calls are being opened in the market and a lot of people are getting bullish on the market. You know what that means? It's time for us to get a little fearful, a little bit, just, you know, we need to be careful here and we need to pay attention to the charts. When the PCC goes into 0.6, I'm always a little concerned. And of course, the lower it goes, the closer to 0.6 it goes, the more likely a correction is coming, and I mean just a miniature correction, back into a key moving average. Let's take a look at dollar index. What happened there yesterday? Well, the CPI came out, it shook the market, and the market actually closed below the 92 level. That was just a catalyst. Again, it isn't really the main reason why this is happening, but it is a great lesson here in technical analysis. I want to go down the 4-hour and the 2-hour. Take a look at this, a series of lower highs. We did it during the live stream. Lower high, lower high, lower high, equal high. and then it puts pressure back on. If you read the price action correctly, you will have a lot more success. And we knew that this 92 was a dangerous zone during the live stream yesterday. So the dollar index coming through to the 91.75. What does this mean? Probably now it returns even lower. I wouldn't be surprised for it to bounce a little bit, but yes, it could go up to the 92, find resistance, and then move on down. Somewhere around this 91.40 zone is probably where it's going to gravitate towards, and it will be well worth having on your charts, because this is going to signal gold strength, silver strength, material strength. If we take a look at gold here, 1747, I would have hoped by now gold was through 1760. It just shows you how weak this chart really has been recently. But you take a look at this daily and things are starting to heat up. 1760, guys, 1760. This is where we are fighting. The bulls and the bears, everyone is fighting at the 1760. Previous support, acting as resistance. We've got a daily 50 exponential moving average, but we still have the opportunity here for the double bottom to play out and for further strength to be occurring. So gold is well worth having a look on the charts. Same with silver. Whatever gold does, silver's going to mimic and find strength at the same time. Continue to watch this chart, well worthwhile having there. BTC, Bitcoin broke out. We talked about how this chart was going to be the one yesterday that was breaking out and is set to explode. Luckily it was. It didn't prove us wrong there from a technical analysis standpoint. Great explosion, 63,000 here all the way up. 65 becomes the next point of resistance. And look, there will be little pullbacks along the way. It's perfectly natural. Go to the 4-hour 20 moving average. That is now our friend in these pullbacks and should be met with buying pressure as long as sentiment maintains in Bitcoin. Very strong chart, great breakout, all-time highs. You're witnessing history through, of course, this halving cycle. And if it continues to follow this halving cycle like it has been, wow, we could be set for a very nice end of the year with Bitcoin. It's all bullish and all green right now. Expect this flow through once it holds up here, maybe moves towards 65 to push into the altcoins. We've already seen Cardano, we've seen Ethereum, we've seen even DOT start to move up. All of these other altcoins will benefit from Bitcoin's new reprice, but Bitcoin must hold it first, and we'll continue to watch what's going on there. Let's move over to US oil. A few people have been asking me why I haven't been covering it yet, because we're still stuck between the two moving averages. So we've got the 50 exponential moving average, the blue line, and the 20 exponential moving average, the red line. If we break or close against either of these, I guess we're going up to the top of the channel or the bottom of the channel. But until it really breaks either way of the channel, I'm not too interested in oil. I'm just having it there. And these are two very, very strong zones that are worthwhile having on your charts for US oil. Let's now get stuck into the stock market and Tesla fans. Guys, look at you go. Whoa. I can't believe how fast that moved through. 8.6%. I'll repeat that again. 8.6% yesterday. Tesla is like no other stock. Well, there were a few nice stocks yesterday. Don't worry about Cloudflare, guys. We weren't sleeping on that one either. But 762 here. Very strong movement. And then now we move towards the 800. I do think there could be some selling at 781, but I've spoken about this range. 720 was the key area to get through. It exploded it yesterday during the first couple of minutes of trade. We were watching it live here on the channel, and then it goes towards the 800 and the 780 zone. Now, do I think 800 is met by resistance? Yes, I do, because that was the catalyst that actually caused all this crashing in Tesla recently. If you have a think over here, we had 800 support buying, we had 800 support buying, then it broke through, then it found resistance on the 800, and then it continued on down. So look, Tesla still could have a little bit of pullbacks, but the main thing is now we're in what called the participation phase. So this is where the market gets back into Tesla, and you'll notice they were upgrading the stock. They were all of a sudden going bullish on it. And then we see this as the catalyst that comes through. So Tesla fans should be pretty happy. The price action's strong. It obliterated any previous resistances or points. Now we go towards the 800. And of course, if you get through the 800, you know where it is. It could be 880 plus. And a few people have been calling 1200 by the end of the year. Hey, I don't know with Tesla. It's wild stock. But yeah, I think movement towards the 780, 800 seems to be the thing that we will see over the next coming weeks, if not month. Let's take a look at IWM, the Russell 2000. We'll get into the indices. Look, the Russell's barely holding our level. You'll notice here that it closed above. We take it over to a daily, which is the most important chart. Nice little reversal. Let's just get a little bit of a high. All I need is a high. Just continue the bullish momentum, Russell. Stop sitting here and move through. When it moves through, it's going to be showing us the slingshot that we want to see, which is going to show strength in the smaller companies. Remember, the Russell is the smaller 2000 cap companies, and this bullish pressure that came in during the back half of the session is good. And even though it finished red, and you're saying, Tom, well, it's not good if it finishes red. It's good because it rejected the zone. Remember, a wick means momentum or buying pressure was caused during that period, whatever it may be. Onto the FANG. The FANG continues to lead the way. This has been the best chart we've probably had in the last couple of weeks in terms of just raw, pure beast mode that's occurred here on the markets, and FANG looks set to be continuing on. There's not much weakness here. I do think any pullbacks will be met by fairly decent buying pressure. You see here on the 4 hour, the 20 moving average is right around previous highs. So any pullback back to these zones should be met by hopefully some bull demand. And movement up to 5,000 is kind of what I'm watching here. I'm actually using this as a bit of a yardstick. If this does occur and we have the community trend line still being hit, and that could be possible depending on how sectors all move, then this is probably going to be where I start to get a little bit semi-bearish for a little while on the FANG, because I think this is a great index, but it's moved up very heavily, and I know it can't sustain forever before a little bit of a correction. We'll move over to the US 100. This one was great on the day trading charts. We had a look at this coming into the market open. We were talking about this resistance, and we got a little smidgen higher. It was all green, all good after that point. That's straight after the CPI data released, and then we moved up to 14,000. Is that a resistance zone? It certainly is. 14,000 is a key psychological zone. Nothing much has changed from the overall concept of getting towards that 14.4, but I would expect some resistance to be found here. Who knows? I mean, usually when a market pulls back just before a key zone, it usually belts through it and keeps going. But I'm just starting to get a little bit worried about how fast it's going. Look, the trend's still up. Everything looks green. But yeah, that speed is very, very fast here, especially with how quickly some of these tech companies are repricing. 340 on the QQQ, nothing really changes here. 340 is the equivalent of 14,000, of course, on the Nasdaq. We could be moving towards a 350 on the QQQ. That's the type of number I'm looking for here. Inverse head and shoulders still in play. You guys know the drill. It's the exact same chart. I'm just putting it up here so you're aware of how it looks price-wise. S&P 500, this is the one that we have the laser eyes on right now. So we saw the community trend line. If I zoom this in really, really hard, I mean, maybe my trend line's slightly off here, but realistically, it hit the resistance yesterday and found a little bit of sell pressure. This is not enough for us to think that it's going back to the daily 20, but I do still think this is where the correction will lie. We're going into earnings. We have banks earnings first, then we have the rest of the companies. We will be focusing on beats and misses. I repeat, beats and misses is what we need to be looking at, guys. And this is going to be what determines whether the market wants to continue to grind higher or whether the market's like, whoa, we're overpriced right now. If companies continue to beat expectations, which are already pretty lofty, then things don't get bad. But if companies miss, welcome to the 20 moving average train, because yes, when we start missing, the companies do not like that. And of course, the Wall Street guys, they'll push it back down and they'll punish it. Put call ratios, beats and misses, and of course, watching those hyper stocks. These are going to be the things that we do on this channel. So remember to subscribe, hit that like button if you enjoy it, and we'll come back with another video tomorrow talking about a market update. We'll also be covering all of this in our live streams going into the market tonight, 1.5 hours before New York Open. It's a lot of fun. Come join the thousands of people in the arena talking about Bitcoin, talking about crypto, talking about stocks, and of course, commodities. We'll see you there, guys. Bye for now.